Ladies and gentlemen of the crypto space, we're live on a Monday, January 26th at 12:20 p.m. And there's a lot going on this morning that people should understand. It's a lot of the same story we've talked about, but it's also a news story. And so much of the news story is so marginal compared to the big picture, but it is interesting to say the least. And we'll look in on the DXY from a daily perspective as it opened the week. And basically, some of these headlines express what the data shows. There was a massive reversal in the dollar versus the yen, basically on market open. And that makes sense. At some point, where is my comment that people like? There's a comment that people like. Where is it? No, no. It was just here. So many have it backwards. Gap down. Yeah, all this, all headlines end in one outcome. The US backs Japan by weakening the dollar. There's no other way it works because if the interest rates, the value of the currency, the value of the money in Japan keeps falling, and what they're going to back it with their currency, which will depreciate their currency, which drives up the value of the dollar, and the value of the dollar goes up, basically takes down the entire global financial system as we know it. There's only one outcome. The US backs Japan. Why? Because the US needs Japan. And frankly, Japan needs the US. And frankly, every single country around the world needs every single country around the world. From a currency perspective, we are entirely, completely interdependent on one another in endless regards at this point. So if we look at a couple of the headlines that I've reposted, there's a couple of interesting takeaways. One, there's some folks screaming that under Scott Bessent's watch, the dollar has lost, what, 10, 15% of its relative fiat currency purchasing power versus other currencies. That's the whole point. And I'll point to my comment, which was so many have it backwards. I don't get why so many have it backwards. It's a very simple mechanic at play. If we've had a strong dollar since 2008 till now, 2022, but it's been what, 4 years? So this is a topping pattern, and topping patterns can take years. So if we've had a strong dollar between 2008 and 2022, plus or minus now, as we can see the blow off top, the big wick in 2022, and we've had an importing economy where everything has been imported and the jobs have been exported because we import everything. If you want to reverse that trend, you need the opposite of the currency valuation trend. You need a depreciating currency as compared to an appreciating currency. I mean, this chart, nobody shows this chart. Nobody shows the dollar, the DXY, from a 6 month candle perspective. I don't understand why. This offers such a unique perspective on the structure of things and how the behavior of people or the behavior of society economically changes depending on the relative valuations of the currency. And we see just the most obvious trends in this chart: up, down, up, down, up. We've come down, but I expect it to come way down over the next 10 to 15 years. Why? Because that's exactly what the chart did back in 1985 and 2002. And why did it do that? Because of everything that we've talked about and everything that's needed for the post, what, $71, the fiat dollar, to function as the current status quo requires it to. It needs to be available in great supply. Therefore, it needs to be relatively cheap. So foreign actors can buy it. And frankly, anyone could buy it. It needs to be available. That's the critical requirement for a settlement currency. Don't get your panties in a twist about store of value. No one gives a shit about using dollars as a store of value. That is a foregone contemplation. We all understand gold and silver and precious metals and our money and everything else is credit. We understand this. Yet everyone continues to LARP about or just LARP about not understanding the difference between money and currency and the significance of it from a functional perspective. None of you use money on a daily basis. Nobody uses money on a daily basis. Nobody walks into a supermarket and pays with gold, silver, precious metals. Some use and argue Bitcoin is a money-like instrument. Fine, that's a complicated topic, but it's not a traditional money. Certainly, nobody uses the predominant money used around the world, which is U.S. government debt. That's the accepted global money because we define money basically as what can be used to print currency. Nobody uses money. We use currency. So it's an absolute mission critical to understand the distinction between money and currency. If you even want to begin to understand capital management, assets, and how the world of crypto fits into assets, because assets aren't necessarily money nor currency, and crypto isn't necessarily assets in the context of money and currency. There's so many subtleties and distinctions which we've really gone over with a fine tooth comb over the years, like how we define the cash position, Bitcoin and stablecoins. Why Bitcoin? Because it is an asset that has money like properties, but also currency like properties. You could use it for settlement. You put it on a debit card and make payment with it, or you could borrow against it. It has money like attributes. And stablecoins, so obviously you could use them for settlement. So why not really understand how money works and currency works? And that plays into the cyclicality that you're staring at in the most important chart to understand where we are from an investment standpoint in varying markets. We're on the threshold of a secular trend reversal in the relative value of the dollar as compared to foreign currencies. It's a relatively straightforward statement with monumental implications with regard to the structure of economics, the flow of capital to and from countries, and which plays into, frankly, the behavior of people. In a strengthening dollar environment, the flow of money is different as compared to a weakening dollar environment. In a strengthening dollar environment, the dollar is relatively scarce, which restricts its capacity to be used in settlement because people tend to accumulate it more. In tough times, like we've seen when oil got expensive in 2020, dollar went up in price significantly. And then it obviously had a massive blow off top in 2022. And energy did what it did. Because if you can't print energy, but you could accumulate dollars, and dollars were the easiest way to acquire energy. And that started to change at the margins post 2020, obviously, but that's another story. The point is that's a conversation like the petrodollar. Can't print energy, but you can print currency. So if you can't print the energy, so but you could accumulate the currency that could be used to buy the energy. So that creates the dollar scarcity. So we understand that a strengthening dollar is not what the administration wants because the administration has said very clearly they want domestic US manufacturing. They hate that we have exported our supply chains. the critical minerals and the military industrial complex and our national security considerations. It's a freaking national security consideration that we don't produce so many things in the United States, yet we can, because economically it's not favorable. It was overwhelmingly favorable to manufacture internationally and import because of a strong dollar environment, which we've had since 2008, which you're visually looking at. It's right there on the screen, up, down, up, down. It's not a debate, it's an observation and a statement based on what occurred. So, what was life like? What was life like between 2008 and 2022? Well, most people remember that. If you're 25, you remember that. It's your whole life. What was life like between 2002 and 2008? A lot of people don't remember that. Either you're very young or financially naive, 16 to 24, don't know much about finances or the way global financials work. And shit, I don't remember. I was born in the 80s, so I don't remember 85 to the 90s to 92. What was life like between 85 and 92? Okay? So the point I'm trying to make is when this chart is going up, it is a different world as compared to when this chart is going down. That what is normal with regard to the availability of supplies and materials, goods and services, what is acceptable with regard to customs and norms of purchasing, it's going to be significantly more favorable to manufacture in the United States probably over the next 10 to 15 years. And things internationally will become increasingly expensive. As the dollar comes down in price, importing things gets more expensive. Happen. Hold on. Hold on. So what happens is as the dollar gets weaker, it becomes more expensive to import things, and that'll put pressure on consumer price inflation. So how do you cure that? You start to repatriate and manufacture things domestically in the United States at a cheaper price. So that's exactly what the administration has been talking about and trying to push for and has actually been achieving. The dollar has come down significantly in value. And frankly, consumer price inflation has also come down significantly. Complicated topic, consumer price inflation, but all I know is I could buy like a dozen eggs. I could buy like 2 dozen eggs for like $4 nowadays. So talk about disinflation. Frankly, that's deflationary compared to I've never been able to buy eggs cheaper than what I could buy them at right about now. Energy prices are a pain in the neck. Consumer price inflation is complicated. The most important takeaway to understand pricing is all relative. The most important thing to understand about currency is people why a big reason people don't understand the dollar is because it must be purchased outside of the US. And that's not something folks inside the US are used to. You get paid in dollars, but if you're in Britain, you have to buy dollars, purchase them, like you're purchasing them at a store. And that's the same anywhere internationally. So most people don't think in those terms. But that's a great way to start to try and understand the way the world works and outside your little bubble of what it's like to be in the US. So if you're outside the US and your whole life revolves around purchasing dollars and the dollar's getting cheaper, it means you can buy more dollars. That changes the whole equation. No, does it not? So the last time we were on the threshold of this kind of change, it was 1985 and 2002. So we can rehash what we talk about almost every stream, and I'll try and minimize that as best as I can and get the comments and keep the stream relatively short today. In 2002, you had a bubble. In 1985, you had a bubble. And we're about to have another bubble because that's what happens when the dollar gets weak. You get a significant increase in global currency supply because of the significant increase in foreign currency valuation, increases purchasing power, which bleeds into asset prices, in combination with the increased capacity for dollar denominated debt. So, in a world that has 300 plus trillion dollars worth of dollar denominated debt, if you have a capacity to purchase cheap dollars or borrow at increasingly reasonable interest rates, which we're about to cycle into, you bet your ass folks are going to expand the dollar currency supply so they could pay interest on their debt obligations nominally and also grow their businesses using the increased availability of dollar currency supply. So, a dollar depreciating environment achieves two things. It turns the United States into a manufacturer as compared to an importer. First and foremost, that's the most important thing. And second, it significantly plays into increased asset prices and increased dollar currency supply, retrenching the dollar as the settlement currency. And as I started the stream, nobody's here to talk about the dollar as a store of value. So no one gives a shit about that. Okay. But if you look at the data, we've seen data indicating the dollar has been used in more international settlement than it has been in decades for the very mechanics that we're discussing. So when the headlines are being critical of Besant, the dollar has lost 10% of its value. Yes, that's exactly what you want. That's how you kick the can. That's how you get the dollar retrenched for settlement currency purposes. That's how you set up the landscape for a global currency supply increase. That's how you create asset bubbles to service outstanding global debts, dollar debts nominally. You need to expand the system to pay for these things, to pay for the fiscal policies of countries and how broken they are. That's another story. So many folks have it backwards. Anyway, this is an interesting one, 10-year versus the CNY, the 10-year debt instrument in China. It's a nice chart. This is stuff that like tech dev would put out. So AO nails this one very nicely. Just another point of confluence, which I agree with. We're on the threshold of a global currency supply expansion in dollar terms. And we have our confluence with the move indicator at 56. So once this broke the 80, in my opinion, that was a forward-looking indicator. Okay. No, 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 no. Go back to move. Okay, there you go. And let's now look at it at the 6 month. So once that broke like the 200 SMA to the downside, that's a forward-looking indicator, about a quarter or two, 3 to 6 months for the system to filter the reality of a decreasing monetary volatility environment into the underwriting departments of banks. And then the discounts emerge, and then the bankers go to town selling their liabilities, which is basically the mechanics for how the global dollar supply increases. Forward looking indicator, because that's exactly what we saw back in April of 2020. And folks will be critical of me comparing now to April of 2020. But the point is, from a volatility of money standpoint, that's exactly what occurred in April of 2020. They crushed the volatility of money by intervening in the market. And as it got crushed, it did the same thing. Towards October of 2020, things started getting interesting. I mean, obviously, at DeFi summer, but towards the end of 2020, things were bullish into the end of 2020. And then the start of 2021 was really the heart of the bull run, which there you go. February of 21, volatility got crushed again from 74 down to 52, which led into the 2021 bull season, as we historically call it. So this is why I like to look at this chart as a forward-looking indicator, 3 to 6 months for the bankers to get their memos from the executives that they need to increase their liability sales, because that's what the dollar currency supply is. It's the banks selling liabilities to balance their double entry accounting books. That's the mechanics of it. Couple of good comments. Mix mentioned 87, the 87 crash. Okay, so what do you think happens after 2026, 2027? Some sort of crazy, exuberant bull run, a significantly depreciating dollar. You get some sort of fracture. The dollar spikes from 85 or 90 to 100, 102. Things start to fall apart. It's par for the course. But my 2 cents is the dollar comes down, lower highs, lower lows over the next 10 to 15 years. So folks should not expect that to occur organically. Look at the DXY. Look at the yen intervention. If you look at the daily chart, look at that gap down. That was a hell of a gap down. Absolutely wild. So cynical maximalism, ladies and gentlemen. You do not exist in a fair game. This is a game of monopoly where the powers that be, the fiscal and monetary authorities, move things around the board, adjust things, and intervene in the system to keep the system functioning, the plumbing functioning, as the Fed would potentially refer to the mechanics of what they do. Cynical maximalism, ladies and gentlemen. To be cynical means there's a negative impression on things. You think maybe the worst of things, and the worst of things is that this is a controlled environment. The powers that be control everything that you do, and you operate basically in a video game mode. I don't see that as anything other than obvious. So, what is the game plan? They've told us the game plan, ladies and gentlemen. They've been screaming it for a year. Dollar down, repatriate supply chain, move rolls over, dollar down creates a bubble. It's not politically acceptable for a bubble in real estate. There'll be riots in the streets. It's not politically acceptable for a bubble in equities markets. They'll be occupying Wall Street again, like they did in a 010, give or take, 2010. It's politically acceptable for a bubble in these crypto markets. So exactly why? That's exactly why they're talking about the crypto bills, the Clarity Act. It's literally tomorrow in Congress. Why do they want all this clarity? It's very simple. They want to tax it. So if you can't politically accept the bubble in real estate, and you can't politically accept the bubble in equities markets, the powers that be between fiscal and monetary authorities are structuring vis-a-vis cynical maximalism to funnel the currency supply expansion phase into a market that's politically acceptable. And they're structuring the laws and regulations to tax it so that they can continue to finance fiscal policy nominally. Now, the cynical maximalism, I mentioned one other very unique attribute, and that's like how much uh, issuance comes out of Treasury. And that's a cute one. People think that Congress just unnecessarily spends, and I don't think that's the case. I think Treasury produces a product, and Treasury is required to produce a product based on supply and demand. And frankly, if you look at the 10-year, My takeaway, which is not everyone's takeaway, but it's my takeaway. We've had stable, relatively stable interest rates since October of 2022. We are at basically horizontal, basically the same interest rate we were at in October of 2022. Treasury met supply with the requested demand. To me, that's obvious. So, from a manufacturer standpoint, Treasury met their obligations. You did not have a significant increase in interest rates, nor a significant decrease in interest rates. And then Congress has to come in and mop up the mess and figure out what to do with all the capital that Treasury has to raise to sell their products to balance supply and demand. So you see what I do with cynical maximalism is I invert the script. Instead of Congress being a bunch of assholes spending too much money to get reelected, Treasury is literally a manufacturer meeting market demand with supply, and Congress is basically just mopping it up, figuring out what to do with the capital. And now we have this whole mess about fraud and whatnot. And that's just because they've had ungodly amounts of capital that Treasury had to print so they could meet market demand with supply. And just Congress is dumb as shit, so they just fucked it all up. Cynical maximalism, ladies and gentlemen. The only way to understand the way the world works. You need to be cynical. You need to think it's probably as bad as you think it is. You understand? It's probably as bad as you think it is. And then become a maximalist. It's the worst you could possibly think it is. Collusion, perversion, fraud, schemes, scams, theft, all of that is exactly the way the system works. So that's why I rest comfortably understanding these markets as I describe them to you, knowing what's coming is coming because it has to. There's no other possible way for this system to function. The only thing we don't know is the path. We know the destination. The currency supply must expand. We know the relative value of the dollar must come down cyclically. And we know what these things will do to the markets. We just don't know when. And we don't know the path. We know the destination. If you're on X or on YouTube, please feel welcome to comment. Say hello, hi, howdy do, and what's on your mind. Top of the morning to you, Cap. Heath, much a pleasure. Barbara, reposting. Thank you very much. Good morning, Cap. Crypto Jake, always a pleasure. Sir Joe, present. I don't recall about 87. Yeah, but a lot of folks nowadays, when I mention volatility, they ask me about the VIX. And I'm like, no, I don't care about the VIX. I don't care about the stock market. I don't care about the S&P or NASDAQ. I do care about like Russell 2000 breaking out or maybe a Wilshire 5000 type perspective. Or what I would prefer to talk about, emerging markets, Brazil, India, so on and so forth, of which there's an interesting correlation between the Russell 2000 and emerging markets at this point, because basically you have two markets. You have this overpriced, over-concentrated pig shit called the S&P 500 and NASDAQ, which is two ETFs. Whoopie fucking do. And then you have the stock market, which is companies that really need investment to grow. So the whole point of a stock is to raise capital so you can build a business. So what have we had with this overconcentration of capital? Malinvestment, shitty investment, investing because price go up. Price go up, buy something. But when you're supposed to be investing in is a company, like Warren Buffett used to talk about. And that's not why people invest nowadays. People invest nowadays because they just want the number to go up. That's why the vast majority of trading is options, right? They're not investing so they could give a company money so the company could grow their business operations, which is the entire point of investing in the first place. The real point of investing. So the point is, We need a cure to this malinvestment, this overconcentration of capital into overpriced pig shit equities. The spreading out of that capital, the redistribution of that capital, that value towards the broader Russell 2000 and emerging markets around the world is very much consistent with the reversal of capital that occurs in an appreciating dollar environment as compared to a depreciating dollar environment. So all the cyclicality plays into itself. So if you have an appreciating dollar environment, all right, capital's flowing into the US. If you have a depreciating dollar environment, capital's flowing out of the US. And the entire goal, the entire mandate of monetary and fiscal authorities is to manage the volatility of that flow. Because if you can keep that volatility under control, you have a controlled financial environment. That's why people mention like the VIX, because when the VIX spikes, people panic. Too much volatility freaks people out because they don't know what the fuck to do because they malinvested. Oh, it's going to go down in price. In price, that's God forbid people invested because they wanted to buy a company. So that's my sentiment. That's where we are. Hey, Cap, metals are flying because no one else knows what to do. Metals are flying because the definition of money is being redefined. Metals are flying because there's a exuberance and a bull market. Folks in the crypto space should be well accustomed to what a bull market does. Price goes up, causes price to go up, causes price to go up. So you got a parabolic blow off top in gold and silver predominantly, other metals as well. Commodities are doing very well, but they'll reverse. There's cyclicality in everything, and that capital will redistribute. Most will lose their capital. Most will lose capital. They won't have gains, they'll have losses. The few will extract the gains and redistribute to the next bubble. And the goal of the fiscal authorities or the regulators is that they have the appropriate tax regime in place so that they could capitalize. And that's exactly why this week, that's what they're talking about in Congress. You get done with these crypto rules and regulations for the exchanges, that they could tax the shit out of people before the bubble hits. They probably have a fire under their ass. There's probably, from a cynical maximalist perspective, they probably have two things in play: structural repression of pricing, which they can do. How do you hold down the crypto space? You short things with paper Bitcoin, which is a thing nowadays. Willie Woo talks about paper Bitcoin. So you suppress prices until you have all your ducks in a row and the taxes could flow. And then the bubble could commence. They close their shorts and they go long and ride the bubble. Are you in a mini treadmill? I like the persistence. Yes. Mini treadmill under the desk. It's not so mini. Sturdy nowadays. Very nice. I've been walking on this thing for 3 hours and 20 minutes already. I'll be on this thing for at least 5 hours today. I'm at the computer for 8 hours working. I might as well walk while I'm working. I mean, in theory, if I walk for 5 hours a day, I'm going to get shredded and do good for my cardiovascular system. So, yay. Kind of a win-win. If I got to work, I might as well walk. My man. That's what Reagan said under oath. So, they've all said this. They all tell the truth. Politicians, they say politicians lie. I don't think they do. I think people hear what they want to hear. And maybe because I look at things as a cynical maximalist, I hear the truth. So I think they say exactly what is. I think that a lot of them are idiots, like absolute mind-bending idiots. That's another story. I think most of them tell the truth. I think in some regards they lie to themselves. They tell a story. They're trying to craft their narrative. But as a cynical maximalist, you peer right through the bullshit so you understand the story they're trying to tell and why they're trying to tell it. Anyhow, that's politics for you. Talking about the dollar, I like to remove the D from the equation completely for charting. Divide CVX by CRV. You see the flow of capital without the dollar. Well, convex denominated and curve is an interesting perspective because convex in some regards is a curve derivative. I would mostly define it as a curve derivative of sorts. I mean, it is an entity unto itself with regard to its governance capacity outside the scope of the curve federation. So you do have to take that into account. It's not just denominated by curve, it's denominated by the other assets that it holds and owns in governance. So it gets a little bit more complicated. But that is an interesting perspective, no doubt. I don't know. I think very simply, Bitcoin is held down in price, waiting for the tax regime to get engaged and set up. And then the beach ball will go kablooey. The orange circles are not the same. We've discussed this. We're having a Japanese crisis right now in their pricing of money, which is basically also a crisis in the pricing of their currency, which is going to result in the US having to back Japan, which makes sense. How else does it end? There's no other way mechanically the system continues to exist unless someone buys and supports the value of the yen, which will buy and support the value of their debt, which will allow the markets to stabilize and allow the next upcoming currency supply expansion phase to engage, which will allow current countries to finance their debt servicing and fiscal obligations nominally. But you need the currency supply expansion to occur, of which we already have that lined up with the volatility of money crashing and the relative pricing of the dollar coming down significantly. Next 10 to 15 years, lower highs, lower lows on the dollar makes way too much sense for me. Peter, good morning, good afternoon, much a pleasure, everyone. Anything else interesting I could talk about? Nirvana's coming out firing on all cylinders. I like it very much. I like what Sid and RT always talks about because Samsara is just very interesting. The fourth market, Ethereum and Bitcoin are live, which are very cool to see. Um, Otavio gets it. Of everyone, he gets it. But he looks back to 2008. This is basically the bottom. This is the uptrend, started the uptrend about 2011. So he looks at this one trend. He looks at basically, you look at the monthly, he's looking at this. And I hate trends. He's looking at that, and he's looking at that downtick right there. I'm like, I can't stand trends. So when you're looking at technical data, it's levels, then it's moving averages, and then it's trends from a data significance standpoint. Levels are the most meaningful, then moving averages, then trends. So I just don't even look at trends. But I like his posts. They align with my viewpoint. And frankly, that's fine. They make sense. Even though I don't like trends, that's okay with me. Because my expectation is, aside from this trend breach, I expect it to come down for cyclical reasons, along with everything else that I've discussed this stream. It must come down. The relative value of the dollar must come down for the system to continue to function as it has. Move down, DXY down, 97, interesting times. Yeah, when you see these three down, DXY move in 10-year yields, you're moving in the right direction. I look forward to this week. The cynical maximalist in me says once they get the tax regime in place for crypto, so that, Coinbase and Kraken and Gemini, the IRS gets all the data, boom, there goes the bull market. And then everyone, there goes the search engine, and everyone's looking for how to buy crypto, and they all go to Coinbase, and oh, everyone's using the centralized exchanges. And then the vast majority of us original folks are like, who the hell uses exchanges? And that's okay. The authorities don't mind the minority that always do things a little bit smarter, a little bit more aggressively, a little bit more strategic. What they want is the majority. And the majority will use the exchanges, and they will get the data of the majority. And the majority will pay their taxes. And the majority will finance government deficit spending. They will finance the interest expense on the government debt. And they will finance all of that vis-a-vis one of the most epic bubbles we've seen since the housing bubble that started in 2002, or the stock market bubble that started in 2012 to 2019, or basically the 80s into the early 90s. Epic bubbles. That's how they finance the debt, ladies and gentlemen. BTC Gold is a chart I like looking at, taking the dollar out of the equation. Yes, I agree. So if you go down to the weekly on gold or Bitcoin, denominate divided by gold, this is a good one. So as you can see, we're marginally above 2017 highs. There's been basically a full retrace. Gold has had its bull cycle. And now Bitcoin gets to do its catch-up trade and unscrew this chart. Very interesting chart, to say the least. We'll see what it does. I'll follow it. I look at it from time to time. It does feel the system is breaking down, but the money printer starting and liquidity conditions are better. Boa. Interesting dichotomy. Well, people don't understand that the system doesn't break down. This, as a cynical maximalist, folks need to understand they don't exist in a world that's just doing its thing. This is a game. I mean, come on, there's got to be a movie. Yeah, what, the most recent Running Man? That was a good one. We live in a perverse society where the powers that be operate the general public in a controlled environment between narrative, the news media. The general public just is spoon fed everything, and economically as well. What to buy, what to invest in, what's popular, what's hot, what's not. Everything is told to everyone. Everyone conforms to programming. Cue the matrix metaphors that are ever relevant. They really are. So everything is breaking down, but that is until everything stops breaking down. And then you have your bull environment and everyone gets euphoric and forgets that everything's breaking down. And that's the nature of the cyclicality that we're here to understand. And it's pretty simple because cyclicality is inevitable. Cyclicality is baked into the system at the physical level. There's a reason there's cyclicality, because everything we do as humans is a manifestation of physical phenomena, and everything in nature is cyclical. Therefore, economics is cyclical as well. Yes, the majority do not know how to use fintech and trust in conjunction to lawful. Uh, Void is the appropriate word. Avoid taxation is completely legal, ladies and gentlemen. Use the rules to optimize your accounting. If you have a tax liability, you have to pay it, meaning if you know you owe something, you have to pay it. But if you structure things accordingly and you avoid a liability, that's fine. I mean, that goes back 100+ years of court precedent that says avoiding taxes is completely, that's even in the IRS handbook. It's literally documented in the IRS handbook. The difference between avoidance and evasion. If you have a tax bill, you cannot evade it. You must pay it. But if bear in mind, if you avoid it, that means you also don't have a tax bill. You just it didn't register as a taxable event. That's an interesting one. Where do you see oil heading if dollars to keep going lower? Cheaper. I don't think Venezuela was a coincidence. I think in order partially to get the dollar down, cheaper energy prices, they kind of go leads and lags. The dog, the tail wags the dog type thing. You know, oil down causes dollar down causes oil down. So it's just another tool in order to achieve their desired outcome. So I think that makes sense. Oil down. How down? I have no idea. I don't bet on oil. I don't play those types of games. But generally, I expect dollar down and energy down. Well, energy is a general statement. Electricity gets complicated. Not everything goes down in price. Was recently explained how to use a trust and trust law with DeFi digital assets. 5513A 404 principle. Oh, I don't know what that 5513A 404, but principal receipts is an interesting one. I sure as hell know about property receipts. That's an interesting phrase, property receipts. 5513A 404. I don't know what that is. 13A. Maybe that's state law. Okay, so state law is critical. Let's take a look if this is what you're talking about. Ah, okay. I know exactly where you're at, dude. Now I wrote a an X post like a year ago at this point. Did you know that every state in this country, every single state, this law with regard to principal receipts and entity distributions of property exist in every single state? And it is a mandatory requirement for entity distributions of property to be allocated to principal, not income, from a fiduciary accounting standpoint. So then the real question, the interesting question is at the federal level, how does that play into subchapter J? And that's the exercise to understand. Because folks at the federal level be like, all right, it's state law. State law doesn't affect federal taxation. But what if the language in IRC code, as written by Congress, actually says it does? What if it does say, maybe like the 10th Amendment, that what's not stated at the federal level is delegated to the states? So maybe these rules at the state level do play into things that are not defined at the federal level. So it may not be explicitly stated at the federal level, but Congress implicitly stated that the states have an effect on subchapter vis-a-vis subchapter J on uh, on federal taxation rules. That's an interesting exercise, which I've handled in many regards in my most recent memorandums. At the margin, the Saudis are switching to euro over the dollar and growing. At the margin, okay, so that's a great statement, and I'm very happy you qualified it with at the margin. So you know what at the margin means? All right, great. Let them do it. You know why? Because at the margin, the world doesn't care with a 300 plus trillion dollars in US denominated debt. The world doesn't care because every year the world must come up with more dollars in order to pay the interest on the debt they already have. But every year the world's going to take out more US debt, which is going to further require more US dollars to pay the interest on not only the existing debt, but the new debt. So it only goes one way because they pay the interest on the debt with new dollar debt. So I'm not interested in the reserve currency. I'm interested in the reality that the world has to pay the interest on their debts. Because what most people think is that most people think in terms of the US debt, and that's so small relative to the world. It's like 12% of the world. We're talking the majority, the aggregate is 88%, let's say, give or take. And that's not the US owing money. That's China owing money to Argentina and Australia owing money to India and Great Britain owing money to South Africa and Russia owing money to, I don't know, Turkey. Every country owes every country interest on debt. And basically, it's simple enough to say every country owes every country dollars every damn year. So, how do they come up with those dollars? That's the most interesting part of the global financial equation. That's completely separate and apart from global reserve currency. No one gives a shit. I don't give a shit who is saving and accumulating in what denomination. I care about the reality that every year more dollars are required in order to prevent one country from being pissed off at another country. That has absolutely nothing to do with the US. That's merely because they borrow dollars from someone. And if you borrow dollars from someone, bet your ass they want to get paid back in dollars. And they want the interest to be paid in dollars. Why? Because that person who's going to get paid interest in dollars owes somebody else dollars. Because everybody owes everyone dollars. And that's why you just don't simply accept another denomination. That is such a far fetched statement I've heard folks talk about. South Dakota, my man, you get it. I was explaining to someone that all my claims of property, not income. Well, so it gets complicated. It's property, not income at the state level, and um, principal versus income is the distinction at the state level. Those are two different accounting buckets. Property is another story, how it plays into IRC 61. Just, there's some interesting caveats to the subtleties you may want to review in some of my most recent memorandums, which are all available on Discord. Now, if you folks are not on Discord, Peter especially, you want to see the most recent memorandums. I break down these topics in excruciating detail. The property receipts memorandum is key, but my most recent one, lack of dominion, really consolidates everything. Because they stopped doing DeFi because their CPA had every claim as income. Um, it's not as simple as that. So it's a reasonable, very high level statement, property versus income. But property has an income component depending on realization, which is IRC 1001, which is Eisner v. Macomber. But what's most interesting is Glenshaw Glass and how it plays into IRC 61 with regard to an accession of wealth clearly realized. And the language explicitly used in these legal rulings that are basically the status quo and the laws of the land. So what's most pertinent um, is a cession of wealth, which is basically dominion. So the real power of a trust isn't necessarily what is qualified from an accounting standpoint. It's really dominion, which is the capacity to exercise unfettered control. And a cession of wealth means someone has a capacity to do something with capital. So what is a concept maybe of restricted dominion? What is a trust instrument and can it restrict dominion in any meaningful way? What precedents are there that discuss restricted dominion or constrained dominion or absence of complete dominion? And this isn't like constructive receipts. It's clearly the case that the trust is constructively receiving property. But what is the precedent and arguments around the topic of complete dominion, which is the explicit phrase used in Glenshaw Glass? Complete dominion means exactly that, complete dominion. So, what is incomplete dominion? And that presents an interesting legal and philosophical question in many regards. I would do some research and cross-reference subchapter J with the UPIA. Thanks, Cap. UPIA is at the state level, ladies and gentlemen. Yeah, what is it? Universal Principal and Income Act. So these these are great topics, and you doing your research is literally exactly what I spend years doing. So I certainly encourage you to do them. I think this is a great topic, a great use of time, and is overwhelmingly worthwhile to optimize accounting. And I see absolutely no reason that it's unpatriotic to be aggressive with regard to interpretation of legal standards, judicial rulings, and most importantly, the de novo reading of the laws as written by Congress, not the interpretations of those laws as discussed by agency lawyers. In a post Loper Bright landscape, one of the most interesting rulings in quite some time, where agency deference was significantly weakened, de novo is more important than ever. De novo means the words of the rules as written. So now we're getting into semantics. Now we're getting into interpretation of intent of Congress. What is the intent of Congress? By choosing one word versus another. So it's literally a semantic analysis, which semantics means the definition of words. So this is literally an educational exercise because it's beyond a legal exercise, really. It's looking into the definitions of words. Why did they choose one word versus another? You can have entire memoranda inspecting just that. Why was one word chosen versus another? And what are the implications of that? Anywho, good stuff, Peter. Definitely. Been a while since I've been here. The captain's Jack now. No, I'm just walking. I'm in better shape. I've lost a lot of weight, healthier than I've been in a long time, hopefully. And hopefully the walking will keep my cardiovascular system in the best shape possible. Ladies and gentlemen, Monday, January 26th, 1:18 p.m. Thank you for joining me a little bit later in the day. I hope this was an informative and useful conversation. 128 people made it to the end of the stream and are now that much more rational because of it. Keep your heads on a swivel. Don't get lost in the noise of social media. At least try and be rational and peer through the bullshit and keep your cynical maximalist hat on and know that you exist in a world that is completely controlled and the powers that be will pay their interest, will tax their receipts, and will create whatever bubble is necessary such that the system continues to function. Y'all have a wonderful day. I'll catch you next time. Peter said the Nova reading, U.S. Constitution, case law, UPIA, and then I read what Congress wrote. That's right. And I build my trust from that. Good info, my man. That's how you do it. And obviously, we're using AI the entire time because its capacity has changed the entire equation. Y'all have a good one now. I will see you guys and gals later this week. Until then, peace.